Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to go over two growth companies that Cathy Wood and her team at Ark Invest have been heavily buying into over the past month. We're going to take a look at these companies' current operations and the massive future growth potential over the next few years. And as the overall market has shifted away from the high-flying tech names that carried us through record highs in 2020 and into more value plays, both of the companies we're going over in this episode have seen a pullback away from their 52-week high, and Ark Invest has been heavily buying the dip. And this asset manager is focused on disruptive innovation in the companies who are going to change the world. And right now, they have a wide array of ETFs that offer exposure into many different high-growth sectors over the next few years, including autonomous technology, genomics, fintech, and even space exploration. And overall, their wide range of ETFs over the past few years have performed extremely well. Taking a look at their flagship fund, ticker ARKK, which is the general Ark Innovation ETF, even after a major pullback over the past few months, it is up over 71% on the year, and over the past 5 years, it's grown close to 470%. So as a whole, Ark has done very well, and the entire company is led by their CEO, Cathy Wood. She has one of the most innovative minds in the financial industry, and she's never scared to give her true opinion on the state of the market and gives very bullish price targets on some of her largest holdings. So I'm sure you've seen her in the news before, a very strong leader, and she has made Ark Invest one of the most popular asset management companies over the past few years. So overall, we're going to take a look at Ark Invest and two of the companies they have been heavily buying into over the recent dip in share price. But before we jump into that first stock, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. And now as we jump in to that first company, it's going to be ticker SHOP, which is Shopify. They currently trade for $1,229 per share and are up by 65% over the trailing 12 months. This is a leading player in the e-commerce sector, and they've seen tremendous growth and acceleration due to the 2020 pandemic. Currently, the company has a market cap at $154 billion and has fallen from their 52-week high of over $1,470 per share. And recently, Shopify has made a massive announcement that they're going to partner up with Google to allow the products sold by Shopify sellers to show up all across Google's platform through Maps, images, search, and even YouTube. So as a whole, this is a massive partnership between two major tech companies, and I think it will really benefit Shopify over the long term and make their platform even more attractive as sellers will transition away from their competitors and into Shopify because of this major partnership with Google. And if we take a look at Shopify's current share price, the company has fallen from their high of over $1,474, around 17%, back down to this current level. So Ark Invest, as they've been recently buying more and more shares, they're taking the best opportunity they can to buy the dip in this high-flying e-commerce brand. And taking a look, we can see that from their initial position in late 2020, pretty much every single week and month, Ark Invest continuously has purchased more and more shares of Shopify, and they now own close to 1.1 million shares in the e-commerce giant. And we can see that throughout the month of May, they continuously made more buys into this leading company, and they currently own around 1% of the total outstanding shares, and this is the fifth largest holding out of all the different companies in Ark's total portfolio. So they are really bullish on Shopify, and it makes up a large portion of their total assets under management, which is a very strong sign that they see a lot of potential in this brand over the long term, and they're bullish overall on the company. And if we take a look at Shopify's recent numbers, their growth has been nothing less than spectacular. And we can see that currently they own 8.6% of the US retail e-commerce market in 2020, just behind Amazon, who of course is by far the majority leader, controlling 39% of the market. Shopify is a second place leader, coming in at 8.6%. So of course, Shopify itself is not generating all the sales. It's a platform for individual companies to sell their products. And that's exactly what Amazon is as well. Amazon is the platform that allows different sellers to sell their goods. So being the second place leader at 8.6%, I think is very strong for a company still, I believe, to be early on in their growth and development, worth only $154 billion and can be worth much more over the longer term. And now if we take a look at some financials, Shopify's total revenue continues to accelerate year after year. Back in 2016, they only generated $389 million of total sales. But year after year, the number has climbed higher to just under $3 billion in 2020. And we can see a major spike, and the total revenue was up 86% in 2020 compared to 2019. So throughout the 2020 pandemic, as more businesses were forced to transition online, Shopify saw a major spike in demand, and that growth is permanent. Now going forward, every single business has learned they have to have a digital presence, and Shopify is a go-to platform to get online for most small and medium-sized businesses. So going forward, I still believe Shopify can post fast growth numbers because not every company and a large majority of businesses are still not online just yet. And one thing I like to point out is I'm a big fan of companies who generate subscription-based revenue because it's very easy to predict future cash flows and revenue growth coming in every single month. And we can see this dark green portion, around 25 to 30% of the total top line is subscription-based revenue. So this is recurring every single month and quarter. This revenue is flowing into Shopify, which is a very strong sign. And their monthly recurring revenue is growing at a CAGR of 45%. So the cash flow they're expecting month over month continues to accelerate at 45%, which is absolutely remarkable. And now from Q1 2021, their monthly recurring revenue is at around $90 million. So if you average that out over a year, that's $1 billion plus in recurring revenue, which is absolutely phenomenal for this e-commerce giant. And we can see that as their total revenue goes up, their monthly recurring revenue has accelerated, so has their gross profit, which grew 78% in 2020 to over $1.5 billion. So the company as a whole has been showing some great financials. Sales are growing, subscription revenue is accelerating by over 45% per year, and their gross profit has seen a major spike as well. So a lot of good things coming from the financial side of Shopify's business. And because they offer so many different products that are actually created by third-party sellers, the company's also done a great job of not focusing on outside users, but also developing their own services as well. Shopify Payments, Shopify Capital, and Shop Plus Shop Pay are products developed by Shopify itself. They collect the fees and the revenue, and all of those have grown dramatically year over year as well, and even quarter over quarter. So the company's done a fantastic job of promoting their own goods and services to their customers as well. And going forward, there are no signs of slowing down. Analysts are projecting that throughout 2021, the total revenue grows by over 51% to $4.4 billion, and then next year throughout 2022, another 32% acceleration to over $5.89 billion in total sales. And from my calculations, I'm projecting over $6 billion in revenue by year end 2022. And overall, their total share price is projected to grow by over 27% per year for the next 5 years going forward. And the company is currently considered a buy, coming in at a 2.3, and the share price of $1,230 is below the 12-month expectation of $1,485, so implying another 10 to 20% upside from their current level. So Shopify is the first growth company to take a look at for your own portfolio. It's worth doing some research into, and Cathy Wood and her team are bullish on the company. They continue to buy more shares every single month, and it's the 5th largest holding out of all the different stocks in Ark's total portfolio. So that was stock number 1 of a company Ark's been buying as of late, and now if we transition into stock number 2, its ticker DKNG, which is Draftkings, the leading name in the online gambling and sports betting industry, and they trade for right around $51 per share. The company is up 13% on the 1-year chart, and they're trading with a current market cap right around $20 billion. And the overall online gambling and sports betting market is projected to grow to $158 billion by 2028, representing a double-digit CAGR year after year. And Draftkings is in a perfect position to continue to grow market share in this industry. And Cathy Wood and her team continue to buy more shares as the stock price has fallen away from the $72.50 2-week high and is now down by close to 30%. So as the share price has been falling, Cathy Wood has continued to buy more and more, really building up her stake in this young online gambling name. And the company's initial position in Draftkings only began back in March 2021. So in a 3-month time span, they went from no shares all the way up to owning over 8 million at this current point in time. And the company owns around 2% of the entire outstanding float for Draftkings at this current point in time, and it's the 17th largest holding in all of Ark's ETFs. And we can see that throughout May as well, continuous buys for Draftkings. So another company that Ark clearly believes in, only 3 months ago, they started this position and now they own 2% of the entire company, which is absolutely phenomenal. And jumping over to Draftkings' latest investor presentation, over Q1 2021, their quarterly revenue came in at $312 million, which was a very strong quarter, growing 175% over the prior year. And Draftkings has done a fantastic job of continuously growing their member base. And at the end of the first quarter, their average monthly members was around 1.5 million people compared to 720,000 at the end of Q1 2020. So they've more than doubled their total monthly active users, which is absolutely phenomenal. And as their member base continues to grow, these people are getting more comfortable with online sports gambling, and their average revenue per user grew as well to $61, up from $41 in the prior year, which is a major 50% increase. So year over year, the company's results through member base and average revenue per user has seen some terrific growth. And we can see that currently they're legal in 12 states. And Draftkings is the leader. They're legal in the most states above all of their competitors. And going forward, as more and more states legalize this type of gambling, I think Draftkings will remain in the top spot. And one thing to know is although that their next two competitors are operational in very large states coming in at 10 and 11, there's a ton of smaller companies that really can't compete with Draftkings at the current scale right now because they're only operational in 3, 4, 5, or 6 states, which really isn't much when you see a company like Draftkings leading the way at over 12. And taking a look, right now only 27% of the US population has legal access to online sports gambling and only 11% to online casino gambling. So that's only a fraction of the total addressable market for Draftkings over the longer term. And over the next 3 to 5 years, more and more states are going to legalize these activities, and the potential market for Draftkings is only going to explode. Imagine where this company will be when 75-80% of the total US population has access to their services. I can't even imagine the numbers they're going to bring in. And right now, the company's historical CAGR for their total revenue is at over 31%, and they're forecasting over $700 million in total revenue for the entire 2021 fiscal year, which I believe they'll smash through by the end of this year, but we'll have to see the results. And we can see going forward, their total gross profit is estimated to be right around 58%, which would be a very nice and sustainable margin for long-term success. And taking a look at the analyst future growth expectations, the company's total revenue is forecasted to grow by over 90% in 2021. An average of 24 different analysts on Wall Street. So it's not one or two bulls. This is 24 different analysts are forecasting an average of 90% revenue growth year over year to around $1.17 billion. And then next year in 2022, another 39% acceleration to around $1.62 billion. If the company can achieve these numbers, I truly believe, in my personal opinion, that the share price will be much higher than the $50 level they're trading at right now. And taking a look at overall growth, analysts are forecasting 30% per year for the next 5 years going forward, and the stock is currently considered a buy, coming in at a 2.1, and the share price of $51 is well below the 12-month expectation of around $71 per share, implying another 20 to 25% upside from their current level. So Draftkings is definitely a company worth doing some research into, speak with a qualified professional, and take a look at the company as a whole and their potential market over the next few years. I think Draftkings will be a leader in the online gambling and casino market for long into the future. And as well, if we jump back into the first company, Shopify, I think they'll be a brand that's a dominant player in the e-commerce market for decades to come as well. So two companies with a lot of future growth potential, the leaders in their respective industries, and both names have seen heavily buys from Ark as of late, as they've both fallen away from their 52-week high. So Ark Invest, one of the top asset managers in the world, they've seen tremendous performance over the past 5 years. Recently, their funds haven't been doing too well as we've seen a transition out of growth plays, but overall, they're still up if you've been holding for a longer term. In the company, with their wide array of ETFs, I think will always be a big player in the ETF market for long into the future as well, as Cathy has built a great team at her company. They're doing great things, they're finding solid companies, and I think innovation will win over the long term, and the companies who continue to grow, develop new technologies, where Ark Invest chooses to put their money, will always provide great returns for decades to come as well. So those were two stocks purchased by Cathy and her team at Ark Invest as of late. Definitely worth doing some research into, and maybe a nice addition for your personal portfolio as well. So please hit that like button, subscribe for the daily videos, and we're going to wrap up today's episode, and I will see you in tomorrow's video.